I mean, it's a nice price. I mean, I think that's what they were hoping for. They were looking for the $10 range. So I guess you could chalk it up to, you know what, the direct listing, at least in this case, is not a bad call. It sort of worked to their favor. I'm actually a little bit surprised that investors have this much appetite for a company that has such an unusual control structure. I mean, of course, they got this far, so you figure there's some value into their management and their control. But longer term, I don't know. I would want more ownership of the voting rights, really, ultimately. And that's still an overhang.
Yeah, Leslie, I wonder, Leslie, if it's a difference of business model. I mean, Palantir does a lot of business with the government, and in some ways that business seems more steady, more reliable than it would if it were, say, a consumer app.
That's certainly true. However, it also calls attention to certain reputational risks that this company might face. Amnesty International out with the report yesterday or the day before, basically raising questions as to whether their work with the government, particularly with ICE, is creating some sort of human rights abuses as it pertains to people who are seeking asylum in this country. We reached out to Palantir for comment on that several times. They have yet to respond to our request seeking comment, but it certainly raises the question from a reputational standpoint. Yes, it's stickier income perhaps because it's something where, they go to the government starts to rely on their software to do business. It can be stickier. They value those contracts at $1.2 billion for doing business with the U.S. government and with its allies. But that said, you still kind of have that reputational overhang with as it pertains to privacy, as it pertains to human rights. And so those are two things that you kind of have to balance when you look at this company.
Yeah, Ed, I'll give you the final word here on the direct listing model. So we've had about 4 major direct listings now, 2 of them today, Asana and Palantir, the other 2 months back, Slack and Spotify. What do you think this is going to do for using this as a way for other companies to pursue going public now?
I mean, look, there's less friction, right? And it's better for current shareholders, and you're not paying these banking fees. And I think that the fact that there's so much hunger for new issues right now in a low interest rate environment, we're living in this new Powell mandate world where interest rates will stay low for a while, even if employment starts or unemployment starts to creep downward. So it's to your benefit, right? You might as well take that route as long as you don't have to raise money. And I think, that hunger, that appetite is something they could certainly play to. One other point, what Leslie said, I completely agree that there's this nice aspect where they've got built-in contracts with government, but it's a little bit like the military industrial complex, right? Where, I don't know, what if the Pentagon says, well, hey, Palantir, you need to be exclusive to us now. You can't sell your services to other companies, other private entities. So that's the other side of that coin, and that's another potential overhang, I think.
Shepard Smith here. Thanks for watching CNBC on YouTube.